In this video, I will explain the 4 simple steps to qualifying for a mortgage in Canada. I was first licensed as a realtor way back in the 1980s, and I spent many years working as a full-time professional real estate investor. My partners and I have qualified for dozens of mortgages ourselves, and I have helped many clients through the process of obtaining a mortgage of their own. Subscribe and click the bell notification icon. Let's get started. Okay, let's break down the 4 steps necessary to qualify for a mortgage in Canada. Hang on to the end, and no matter where you live in Canada, I can connect you with an excellent, experienced mortgage professional that can help you get qualified for a mortgage of your own. The first step in qualifying for a mortgage is income, and this kind of makes sense, right? The basic question is, can you afford to buy a home, or how much home can you afford to buy? The guideline in Canada is that your housing cost should be no more than 39% of your before tax or gross income. Let's work through a quick example. So for this example, let's assume that your annual household income gross before tax is $75,000 a year. That means at 39% and per month, you should be able to afford for housing $2,437.50 for your total housing budget. Now this includes your mortgage payment, your property taxes, a budget for heat, and that's sort of average annually because it's a little more in the wintertime and less in the summertime. And if you're buying a condo, 50% of the condo fees should also fit into this budget. Now keep in mind that any other debt will also possibly limit the ability you can qualify for a mortgage. So your total of all debt payments, including a mortgage, can only come up to 44%. So other debt can only come up to 5% of your total income before tax. Any more than that, and it will start reducing the amount of mortgage you can qualify for. So let's work through a quick example. If your annual household income is $75,000 a year before tax, and that would allow at 39% a household budget of $2,437.50 per month. And if we deduct $125 for heat, $2,500 a year for property taxes, that's a little over $208 a month. That would leave you $2,104.16 to budget for a mortgage payment. And with current rates, we would be able to qualify for just over $300,000 mortgage, or $300,680. The next step in qualifying for a mortgage in Canada is your credit score. Now, credit scores are calculated and reported by 2 major credit reporting agencies, Equifax and TransUnion here in Canada. And they're calculated based on, this is just really basic, your punctuality in making payments, the amount of debt that you carry, and what percentage of the debt that you qualified for are you using? Are your credit cards maxed out? Are your lines of credit maxed out or not? And the scores range from about 300 to 900. So 900 is absolutely fantastic, and 300 is positively terrible. So let's hope you're in the higher end of that range. Now, the credit reporting agencies in Canada will provide for free copies of your credit report with all the details on them. And I'll include links in the description below where you can order those, or there are paid services to get them quicker, like Credit Karma and so on. So the credit score that you'll need to qualify for a mortgage is about 650 and up, sometimes with some lenders 600 and up, to get a mortgage approved with most of the major lenders. If your score is in the 500s, it is possible with some private or alternative lenders, but do expect you're going to be paying quite a bit higher interest. Now, the third step to qualifying for a mortgage in Canada is down payment. In most cases, you will need 5% of the purchase price in cash for a down payment. In most cases, you'll then be able to qualify for 95% mortgage to complete the purchase. Now, if you think you may have trouble qualifying for a mortgage based on your income, down payment, and credit score, there may be alternatives that we can bridge that for you, some creative strategies. So if you were to just comment below and then just reach out, and I'll look at your individual situation and see, along with a qualified mortgage professional, we can come up with a strategy that can work for you. All right, the 4th step in qualifying for a mortgage in Canada is documents. All right, I have a bit of a list here of the most common documents: job or letter of employment, your most current pay stub, and if you're getting a lot of your income is from bonus income or overtime income, then 2 years of T4s will be necessary, or 2 years of T4s and 2 years of your notice of assessment from your taxes may be necessary to document your income. Account statements confirming your source of down payment. So if your money is coming from your RSP or a bank account, just 3 months, 90 days of bank statements showing you have the money and where the money is coming coming from will be necessary. In some cases, other documentation may also be required. Now, I promised if you stay to the end, I would make an offer to connect you with an excellent mortgage professional. It doesn't matter where you live in Canada, these professionals can work with you towards getting your mortgage approved and at the best rate possible. And the best news is you don't pay them. They actually get paid by the mortgage lenders after your mortgage is done. And until they get your mortgage done, they get paid zero. So if you found this video helpful, make sure you smash the like button, subscribe, click the notification bell so you don't miss any future videos, and leave your comments below. See you on the next video.